Hi, friends. Very good afternoon. I decided to do a live uh, video session because I had been reading a lot in the financial newspapers and also trying to gauge my information on how the economy, both in the Indian context and globally, things are looking. Now, India appears to be a sweet spot in the global things. And I will also like to give you a perspective of the global picture. So, the mother of all markets, as we know, is the US markets. Now, as an investor, you need to understand few nitty gritties. And I've been tracking US markets for some time now. Of course, before I begin and discuss anything, please note that the information here is only for the purpose of learning, understanding, and for investor education. This video is not any kind of an advice, offer, or promotion to sell anything. Okay, so the global markets, as I say, US markets, now they're also going through a lot of changes on a daily basis. New data keeps coming at their macro level, but what we need to understand is that the ground reality may be very different from the reality because inflation in US, as per experts, is higher compared to what is being reported in the data. Now, that is what directly affects the US customer, and also this is something which would affect any customer in any country. So, that is a big challenge. Number two is the job creation. Now, data sometimes comes positive, sometimes comes negative. There is no clear clarity on job creation, and of course, data, of course, can be very different from different sources. And I'll not like to comment exactly on the data, but primarily the trend seems like inflation is sticky in the US, and there is a chance that inflation may be stickier. How much, what value, I don't really know. So people are trying to, look at various investment avenues apart from equity because currently the equity markets in US are doing very well. They're also looking at gold as a hedge, and there are also various other parameters which are being looked at, you know, kind of to uh, hedge the situation. So, coming back to all of that, the overall investor experience in US at the moment is positive. However, because inflation seems to be sticky, the experience could change or could be very different in future as well. Now, coming to the fact that Indian markets, now India also would be depending on the mother market, which is the US markets, for a lot of inputs. So the whole idea is that our Indian investors should be aware about how these markets are behaving. So currently, if you look at the Indian equity market scene, we are doing very well. Overall, our macro picture, our macro stability, everything seems to be very fine. There is no element of any kind of macro instability. Everything seems to be fine. But we need to be cautious as an investor, and we need to understand what are the pros and cons of any investment avenue. For example, currently speaking, if you are an investor, if you are uh, trying to have a balanced portfolio, again, you need to understand your risk profile. If you're an aggressive type of customers, you may enter into equity investments, depending again on your risk, by going through an asset allocation strategy or through an SIP based thing or looking at conservative, balanced or hybrid kind of portfolios because markets are at a very elevated level. So you have to also protect the downside. If you are a conservative type of customer, you need to understand that overall situation is again highly volatile because markets again are a function of various things. So you need to be positioned properly into debt. So you have a mixed portfolio of debt investments. It could be bonds, it could be various other debt investment avenues like high quality corporate instruments. You could also look at pure equity, but only if you understand and only if you have the knowledge. And otherwise, don't look at equity as an asset class for a conservative clients. But what you need to do is always remain invested. And for all kinds of investors, the general take is please follow any investment decision only as per your risk profile. Conservative clients do not have to look at equity beyond a certain level. Mostly, it should be conservative debt portfolio. A balanced or aggressive client could look higher allocation into equity. Again, markets are at a high level, so be careful before investing. And overall, you need to understand that markets would always be challenging. So there is no right or wrong level. What I've seen is, if you have remained invested in a situation for a 5 or a 7 years cycle, chances of making a decent return improve. Of course, there are no guaranteed returns in equity or debt or any other asset bucket, be it gold or any other real estate or any other asset class. You have to invest only as per your ability to take risk and be comfortable with that. Thank you very much, and I hope you got some insights. Take care. Thank you once again.